Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn Associates with your financial market wrap-up for Tuesday, the 21st of November, 2017, just getting on to 3:28 p.m. Central Daylight Time. I apologize for not putting out a financial update yesterday. We have been buried with our new website, link issues. You know, if you've ever put one of these up, and this is not my first rodeo, it's always an issue, and we had to use our time, and some of it we have to do after the market. As it is, I got out of here at 8 at night. We're about 2 minutes or so, a minute and a half from when they start trading again. These will be the settlement prices in all the stock indices, and as you can see, another stellar day. The market is looking at hopefully a good Black Friday for sales. The market is looking at, so far, it appears that maybe within 10 days or so we can get a vote out of the Senate on the tax bill, and then it can move into a conference. But as I wrote in my advisory service today, I warned people, I said, there will not be a Senate vote if they don't have the right amount of votes in hand. They'd rather not lose. That means they're going to make certain that in order to get it out of this stage, that they can get it to a point where at least it passes the Senate. Then the big battle comes as to how do the House and Senate get together. But the market is telling you its thoughts, and you saw the stock indices up, earnings season coming to an end, and it was good. In the metal markets, you know, we had a big down day yesterday, so I guess you can look at it as a bounce today, with the exception of copper and the palladium. I think those two markets are giving you a bit of a different story. They look better than they did before. Now, when we get to the S&P 500, what can you say? You're just running away. You haven't had more than a couple of percentage point correction all year long. The market has stayed on a weekly basis over the 18-week moving average of closes since 2006. Well, let me take it back here. I'm wrong on that. Since November of 2016. So you've had a year of trading where you have not been back under the 18-week moving average of closes, and even more important, you really haven't hit it. You've pulled away from it. When you get to the December daily area chart of closes, it's different. The market showed its first, if you will, weakness because we got under that 18-day average for the first time since back here at the end of August. And so we saw one move, and then like it said, hey, Dad, I'm not going to be left behind. Wham! The market takes off and all the way to the upside. And you can see this is now an all-time high close. I mean, it's everything good, happy Thanksgiving. Isn't that the way to say it? The trend turned. Now it's higher lows, higher highs. Prior to today, you had lower highs, and the question was, were you going to start making higher lows? You didn't have a financial update yesterday, so I couldn't show that to you. Once you clear 25.89, that puts the market right on kilter for an uptrend. Notice the battleground. Again, that 18-day moving average of closes in red, that's the 100-day down there. You went to the upper Bollinger Band today, and you settled basically at it. So, can the market push out from here? Of course it can. The question is, what does it do? Each time it's been in this general Bollinger Band area, it has pulled back. Will we get a pullback in front of the holiday is the question. Tomorrow's the last full day of trading up until a week next Monday. So just remember that. Last full day of trading tomorrow. Yes, the markets and financials will open in the electronic sessions Thursday night, but they all close at noon Chicago time on Friday, so half day of trading. In the S&P 500 on the slow stochastics, the market is overbought. So you have momentum up but overbought, bias up because you're over the 18-day average, trend up, and you've hit your first upside resistance. The NASDAQ went right to its upper Bollinger Band, stalled. This market had lost its bullish embedded reading. It never did quite get, other than first time here, if you take a look. This is when you lost it. You got to your 18-day average. The secondary break, you never re-embedded, and you're right now just overbought. So you have an overbought market that is in an uptrend, that does have upside bias and is hitting, just like the S&P, its upside resistance area. The Dow, Notice how this market stopped against its upside Bollinger Band. Now the question is this enough sideways action to get them launched to the upside? Unlike the other stock indices, this market is not overbought. That doesn't mean that the upper Bollinger Band against this 23, let's call it exactly 23,549 and a half, sometimes I get tongue-tied there, isn't going to be the resistance. You're literally right on it. What about the Russell? So for those of you that don't understand Bollinger Bands, it's time to start understanding them for the importance of why markets stop to the upside, downside, sometimes at these important numbers. Now, you are overbought. You're in what we call an upthrust. You haven't looked back since 1450, 310, and this market has gone up rather dramatically, 60 points. In the VIX, as I pointed out before, you get over this upper Bollinger Band and you magically fail back to the 18-day average. Today you're under it. Yesterday you went right to it and stopped. Today you got to follow through to the downside. And at the same time as the momentum's coming down, it's instantly oversold. So what you might have here is time for the markets to even up a little bit going into the holiday. In the T-bond, we're still with the flattening of the yield curve. So the futures are going up in the T-bond, and the trend is up. The market's got upside momentum, upside bias, and notice the 18-day average and the 100, you could get a crossover tonight where that's even more bullish, which generally means lower rates because it's an inversion market. The 10-year note's completely different. Lower highs, lower lows, calling for higher rates. So we're not through with this inversion taking place, if you will. Well, flattening is the first word. I don't know that inversion is the right word. Flattening of the yield curve is it's doing this. The short-term rate's going up, long-term stalling now. In the dollar index, you don't have any trade going. What do I mean by that? You have the swing line with higher highs and higher lows. However, prices have stayed under the 18-day average. Therefore, the bias is down. The trend is the swing line defines it with higher highs, higher lows is up, and momentum has gone flat in the market, just drifting sideways at 31. In the eurocurrency, this market got hurt when Angela Merkel has now but 3 weeks to either put together a coalition government or they will call for new elections. So whatever she gets, it hurt this market. You saw the break, but it never did get under the 18-day average of closes. So instead, if you're a chartist, you throw off the name of the chart. You say you were in an uptrend, you got to the 100-day average in the Bollinger Band, and that was enough to stop the trend. The market saw the swing line turn down, but you're over the 18-day average. So the bias is up, the short-term trend is down. The two cancel out each other, and momentum has gone flat at 62. It's not overbought, it's just a flat momentum. In the Aussie dollar, was interesting today because bank governors came out and said they're not about to raise interest rates. They don't see the need at this point, and the market zooms to the upside. But you shouldn't be all that surprised. You've been riding the lower Bollinger Band, so you're getting a bounce. Lose the embedded reading with the red line closing over 20, and then you can make an argument for the 18-day average. If this market starts stalling out up here and you stay embedded, the odds are the bears are going to take control of it again. In the Japanese yen, the upper Bollinger Band is what the market is running against. The trend is up. The bias is up because you're over the 18-day average, but you are very overbought, which is always a danger sign. We've had a heck of a correction going on in the differential between Brent and WTI. You were up here. In fact, let's take a look at this difference. Here's the max difference you were right at this peak, $6.70. Every time it's moving down, you're seeing what's going on, and all of a sudden it's given back about $1.20, $1.30. More than once I was here saying you get a $6 premium, and it's pretty easy to send American oil by tanker anywhere you want. It doesn't cost, in most cases, anywhere near $6 a barrel to transport it. So they're bringing in the differential. But keep in the back of your mind, today's the 21st. On the 30th of the month, OPEC meets. Are we getting a correction in the Brent in front of that? Maybe that's all that you're seeing. What's the trend in the Brent? It doesn't have one. You've got a pattern of a lower low and a higher high. That's not a trend. Momentum is not down or up. It's drifting sideways, and the bias is up because you're over the 18-day average of closes. In the Brent, you're in an uptrend still. You've got a pattern of higher lows, higher highs. You've stayed over the 18-day average of closes, and you still have momentum pointing to the upside. In the rebob, you have a condition of higher lows, higher highs. Bullish until you take out this number, 171.40. If the market can go up, maybe it gets back to the upper Bollinger Band, take out that lower number, you end the uptrend. Momentum is flat. It's not giving us an indication of what to happen. And in the nat gas, this mild weather, and yes, it's been relatively mild, we're not seeing the draws in the natural gas that we normally do, and it's put pressure on the market, keeping the market in a downtrend with lower highs, lower lows, momentum down. You're under the 18-day average of closes. I want to remind you that at this time of year, you start looking at the end of November, beginning of December for certain year-end seasonal trades. One of the expert services on it is More Research Center. And yes, what they do is they'll look at seasonal trades and they'll give you an entry date, an exit date. How many years does it have a win percentage to a lose percentage? What is the average amount of days during that time the market was profitable versus the trade or lose versus the trade? Once you get under a certain percentage, they stop following the trade. They not only do it for the futures markets, they do it for spreads as well, which is what I had there. Then they give you a write-up on different spread outlooks and futures outlooks. Let's assume you have an idea, like the stock indices, you've been in a bull market. Well, you have three different ways to look at an interactive chart. You've got, first of all, the legend, so you can go to the longest, which is typically 30 years or more, 15-year periods, and 5. Then it allows you to filter out bull years or bear years or neutral years. So you get to play with it and see where you're at by putting your cursor over it, and the chart lights up with all that interesting information. I want to remind you again, seasonal trades are one thing. They're another tool. They are not your guide to the future of what's going to happen because past performance cannot guarantee what the future holds. On the other hand, it's a tool. So if you'd like to get 2 weeks free access, give my staff a call. You can go to our website. Our new website's up at www.iraepstein.com. You can click right up here if you're watching me on YouTube, or underneath us on many websites it says click here for Ira's free information. Do so, we'll put it in your hands. I'm Ira Epstein. Thanks for watching, and I'll see you tomorrow.